Hi everyone, in this video I'll discuss why Bitcoin mining and inflation have such a large influence on the Bitcoin price. Why are they the long-term reality check? What are the daily buy and sell pressures? I'll talk about daily selling from the miners over the past 4 years and the 4 years prior to that, what the buy and sell pressures need to be to maintain the current price of 10k. I'll talk about the sell pressure from the holders and the sell pressure from the miners as the price climbs up over the next few years. I'll discuss why it is not reasonable to expect 100k anytime soon, and at the end I'll just mention Ethereum 2.0 with their security model. Please give me a thumbs up. Please look at the links in the description below, which will save you some money. So at the moment, the target Bitcoin mining rate is 444 blocks per day, and with the current block reward of 6.25 Bitcoins per block, it is 900 Bitcoins per day. So that's the average amount of Bitcoins that are minted. There were 12.5 Bitcoins mined per block prior to the halving in 2020. So this video is being done after the 2020 halving. If we draw the arbitrary line, this is just a ballpark line on the chart from 2014 to 2020, I will just highlight that area. Then the price, the ballpark average price of Bitcoin over that 4-year period was around 5,000. So that means that the ballpark average daily miners selling has been $5,000 times 1,800 Bitcoins. That's $9 million per day. So the miners have been, to pay for their electricity and their staffing, they were selling $9 million worth of Bitcoin per day. Using the ballpark figure of $250, which is more or less the average over the previous period between 2012 and 2016 halving, the ballpark average daily miner selling was 0.9 million, so just under $1 million per day of sell pressure. With the current price at 10k, the daily miners outflow is $10,000 times 900 coins per day. That is 9 million. So this is exactly as much as the average over the previous 4 years, and the previous average includes 2016, 2017, and at that point in time there wasn't too much interest in Bitcoin. On top of the miners outflow, there is also holder selling. So the selling is incentivized by the price going up. With the price spending a lot of time over the 10k level over the recent months, and in the previous years as well, whoever had their plan to sell at 10k has already done so, or at least majority. I don't think that the long-term holders will be keen to sell below 15k. However, there are plenty of holders who have their targets at around 20k, 30k, 50k and above that. I think the large amount of holders will consider selling at these prices or even at 15k. This all means that to maintain the current price at 10k, Bitcoin needs to have exact same interest and buy pressure as the average interest between 2016 and 2020. And I think this is quite easy to achieve because Bitcoin is only gaining popularity. And this popularity is increasing rapidly, particularly in wealthy and macroeconomic circles. It's quite a good alternative to gold. It is reasonable to expect that there will be more interest in Bitcoin, much higher than in 2016, 17 and 2018 figures. I suspect that this interest will take Bitcoin to at least 20k, and long-term holders will be interested in selling from 15k upwards, because the price has not recently reached such levels. That puts my minimum take profit levels between 15 and 20k. Now let's look at the maximum take profit levels. While far into the future the security spend will continue dropping, I'm looking at the take profit levels before 2024 halving. My take profit levels depend on the holders selling and on the security spend. The miner's security spend is inevitably sold on exchanges to pay for their electricity and for staffing. Obviously, I have zero clue, but I think that it is reasonable to expect that sustained Bitcoin buying rate can be in the range between 2 and 10 times as much as it was on average between 2016 and 2020. I think that the more reasonable range lies between 3 and 5 times more interest than there was between 2016 and 2020. That gives a reasonable buy pressure expectation that could take us to 30 to 50k and sustain these levels. However, we need to take into consideration holders selling. And again, I have zero clue, but I think the above number could be reasonable in the absence of sellers. Taking them into consideration, I think that 20 to 30k is a reasonable, sustainable long-term price range for the next few years. Obviously, this is sustained buying, and on the way to 30k, we would definitely overshoot to some high number. So sustained 30k could well mean a brief spike to 50k. Sustained 20k could mean a brief spike to 30k actually. So why is it not reasonable to expect 100k anytime soon? And by 100k I mean one Bitcoin price of $100,000. So at 100k the security spend would have to be $90 million per day without taking sellers into consideration at all. Taking them into consideration, I think we would need 200 million daily inflow to maintain such price. So $200 million. Given that over the past 4 years the average ballpark inflow was 9 millions per day, I think achieving over 20 times more would be hard. I'm a big fan of Bitcoin. I used to be a Bitcoin maximalist, and I think that Bitcoin will remain the bulletproof, most censorship resistant and most attack resistant currency. However, and I acknowledge that there is a plethora of issues with Ethereum and Ethereum 2.0. However, I have recently started entertaining the idea that maybe Ethereum proof of stake model could be better. The reason is that ETH inflation will go to the holders rather than to the miners, and by miners I mean mandatory sellers. This is long-term thinking because Ethereum inflation will actually increase and remain high until Ethereum 2.0 is complete. Also, currently low Bitcoin price does not force sellers into selling Bitcoin for large amounts of dollars. However, I suspect that around 2022, when I expect Ethereum 2.0 to complete, Bitcoin will be very valuable, and miners selling will create a large sell pressure on Bitcoin. That will create a narrative probably sufficient for some users to switch to Ethereum, where this mandatory sell pressure is not existent. Thank you very much for watching. Please give me thumbs up, comment and subscribe. Have a look at the links in the description below if you open a new account on one of these exchanges, which I actually recommend. You will get the fee discount, so please use my links. Thanks for watching.